Okay, so a very good morning to all of you. Now, we are running into the 10th week course and we are discussing about intellectual capital management. Okay. So, in this week course, we have started talking about various issues related to intellectual capital management. And you remember that in the beginning we talked about what is intellectual capital management, what are the various components of intellectual capital management and how we define it. And in the second session, we started talking about that how we are going to measure the value of intellectual capital. Ideally, when we are going to measure the value of human capital, we have to see that we are going to create some kind of index to see or find out that what is the value of intellectual capital for an organization. One. Second, whether this value or the index of human capital index is appreciating or depreciating over a period of time. So, it depends a number of factors and that how the various components of intellectual capital, be it human capital, structural capital, social capital or relational capital are increasing. Now, that is where HRD professionals have a role to play, that they are going to make lot of interventions in terms of training and development, in terms of what you call coaching, mentoring and other activities to ensure that the value of these indexes goes up, whether it is building good relationship at the workplace, whether it is contributing to the growth and development of the organization by increasing the and at least suggesting and advising that how to go about increasing the infrastructural capital, and then suggesting that how we can increase about social capital and relational capital. Similarly, they are also responsible for improving the competency level of the employees, and this would help to improve overall capital intellectual capital index of an organization. Now, with this introduction, I am going to see that how it is going to be measured and developed, right, and then we will look into some of the measures which actually talked about creating intellectual capital index. You remember we talked about this Contd navigator, okay, which basically helps you to find out measure the value of this. So, based on these values, probably are trying to create some kind of index which is going to be good for the organization. Now, when it comes to creating intellectual capital index, there are a lot of developments have taken place and number of people or authors have come out with various suggestions and developed certain models as well, and we will look into some of the important models. It is not an exhaustive list, but I have tried to include some of the important models which have been there, and we will start with the first one and decide that why there is a need to measure intellectual capital index. Now, if you look at intellectual capital index, earlier what used to happen that we used to have different indexes, right. We wanted to calculate the value of human resources separately, we wanted to see the contributions and growth and development indexes separately. Okay. So, there was no single consolidated index, okay, which was available to the organizations to see what is the index of the total intellectual capital, which comprises all the components, right. So, it is the latest development, that is what we call it second generation development, and in the second generation development actually we are going to see that how the practices which have been at different are with the different indicators, that how they could be consolidated into one single index. So, the idea was that whatever practices were adopted earlier, you are going to consolidate into in one single index, and then you are going to see whether if there is a changes in the intellectual capital index, how it is being reflected in the market in terms of the market value of the organization, not the book value, right. Now, with this introduction of creating intellectual capital index, we move further and see that what is the why we go about it. Okay. Basically, if you are able to create an index irrespective of using a single model or a combination of these models to ensure that the authenticity of your intellectual capital index. The idea is to see that whether you can see that whether this value creation process is being managed effectively or not. Value creation process means when you are going to add value to the people, their competencies, whether you are going to add value to the organization, infrastructural capital or relational capital or social capital. So, when you are going to create value through various interventions at the individual, group and organizational level, whether it is being reflected in the intellectual capital index or not, that is going to tell you about the index, but whether this value creation process is worth taking it up or not, that can also be identified, provided the value of intellectual capital index goes up, right. So, if you find that the value is going up, probably you would be able to realize that yes, the value creation process is effective and you are able to manage it very effectively, right. Now, we will discuss some of the indexes that have been created, and the most important is that is developed is by Roos et al. In way back almost 20 years back 1997. Now, if you look at this, he says that if you are going to create a single intellectual capital index, it has lot of advantages in terms of probably you will be able to monitor how you are progressing on different indicators, right, whether there is a change in human capital, structural capital, social capital and relational capital or not. And it also looks into your prior performance, and after the changes that happens, whether there is a significant improvement in the performance or not. So, you can also compare pre and post to ensure whether there is going to be a change or not. Okay. And you can it is self correcting, it means that once the value of the various capital, which is a part of human intellectual capital, changes, whether it moves upward or downward. Similarly, the value of intellectual capital index will also keep on changing, and it is so it is a self correcting measure. I mean, wherever there is change in the market value, it is not actually reflected in the book value, but if there is a change in the market value, it means there is going to be change in the, or there has been a change in the intellectual capital index. Okay. So, lot of indicators, metrics and say weights are used to identify what is the intellectual capital index. Basically, we are going to use this book value using various indicators, which are basically components of what you call intellectual capital, right. Now, you can also say that whether this value is going up or not, depending upon the change in the market value, as I told you. And then you can go about changing your intellectual capital index management strategy, because if you are able to better manage your strategy, probably you will be able to have more significant improvement in your various indices of the human capital, sorry, intellectual capital. Now, the question is that based on the feedback that you get about your intellectual capital index, what kind of a strategy you are going to adopt to ensure that this index moves up, not downwards, or it does not become static, right. So, this is where the top management has a role to play, and through HR professionals, through their interventions, are going to ensure that they are going to develop their strategies related to learning and development and other things to ensure that this index goes up, right. If you look at Scandia measure, he used it as a supplement, but if you look at this other measures, you will find that they have a slightly different measures. Okay. Now, some of the weaknesses, if you look at this kind of index, is because it is context specific, it is related to particular organization, depends upon the kind of environment it is going to work, right. Then similarly, you will find that how things are being judged, and whether you are able to judge all assets properly or not. So, it depends upon the process of making judgments about the value of different capitals. Okay. Whether it is human capital, structural capital, social capital, rational capital, how we are going to transform the value of these capital into a monetary form to decide about the values. Okay. And it depends upon the experts, the mechanism and the process that they are using for making value judgments, and see to it that they are going to be more objective, okay, in the assessment of values. Okay. So, if there is any change in the system and the mechanism process of value judgments, then it is going to change, right. Then the third part is that if you look at some of the important indexes, then the first one is created by Annie Broking, and in 98 he came out with a concept known as technology broker, and this technology broker has three major stages. Okay. So, the idea is to measure the intellectual capital using certain indicators. Okay. So, first stage actually what happens, he has certain questions which is basically a part of intellectual capital indicators. Okay. It could relate to different kind of capital that we have, And then if you look at these 20 questions one by one, it says that whether you know about your job well, how it contributes to goals and objectives. It means that whether the individual goals are clear to the individual or not, and then whether it is aligned with the goals and objectives of the organization, and how people are being treated in the organization. Okay. Whether they are treated in asset or whether they are treated in capital, we have already talked about it. Okay. And whether they are management see to it that yes, every people is into a job which better fits them. It means that there is a better match between the individual and the job, or the person in the job. Okay. And then you allow to everyone to have opportunity for career development. Okay. And this is possible only when you go through HR interventions. It means that role when you are talking about strategic HRM, or how you are going to deploy a strategy to deal with the people, and that is where you have these kind of roles to ensure that these indicators are measured well and are effective. For example, it is the responsibility of the HR professionals to ensure that the goals and objectives of the individual is aligned. Similarly, they are going to see that you have a philosophy, HRD philosophy, to treat people as an asset in the organization and ensure that growth and development opportunities are available to them, and for that you are going to offer various interventions to them in terms of coaching, mentoring, developing, and these kind of things, right. And then you measure the effectiveness of this using financial measures like return on investments that has been made in R&D activities, research and investments, and return on investments that you make on learning and development interventions. So, whatever investments you make, and then you see that whether the ROI on these activities are good or not, right. Then whether you are able to retain your customers or not depends upon how well you have trained in interpersonal and other skills to your sales people, right. So, based on these various indicators, at the first stage you will be able to create something which is going to be of value to the organization, right. And then from this stage you are going to move to the next stage, that is the second stage. Now, if you look at this, he is going to measure this in 4 different areas, that is market assets, human centered assets, intellectual property assets, and infrastructure assets. That is nothing else but relational capital, human capital, okay, infrastructural capital, and say relational capital. So, if you look at this, what he did, that he actually has these 4 criteria based upon which this is going to be measured. And if you look at the audit area question, it means the number of questions which belong to each of these areas. Like in market assets, when you want to measure relational capital, customer capital, you have questions on branding, customers questions related to the customers in terms of the commitment, loyalty, retaining customers, being repeat customers, okay. Your brand value, your reputation and image and an organization, okay. What is your backlog in terms of inventories and these kind of things, what is your collaboration with different organizations, okay. So, this creates a asset which is known as market assets, okay. So, some of the questions that has been given as an example, like what is the cost of protecting the brand, and what is the whether you have repeat business or not, okay. What does your company's name mean to stakeholders? It means some of the branding and image and reputation, okay. What are opportunities that you have to collaborate with your partners, okay. Now, moving to another asset, that is human centered asset, and in this case you will find that there is a number of measures that have been used, the questions that is being asked. It could be related to education, vocation, work related knowledge, okay, occupational assessment, then work related competencies that you have, what is the corporate learning opportunity that is provided, okay, and then how this human capital is being managed. So, there are a number of questions related to this, and this is basically related to identify the competencies, skills and behavior that is required to perform well. Okay, and what is your learning and development activities. Okay. Moving to the third one, that is intellectual property assets like IP. So, you know that IP is a very important area today, and IP is created and maintained, and then you go for patenting it. Okay. So, not only it does not only include patents, but include copyrights, designs, trade secrets. So, what is the status of these kind of things? Okay? How many patents you have, how many of them actually exploited commercially, that is more important. Okay? What is the copyright that you have created, okay? And how many trade secrets you have, and how many trade secret agreements you have made with other companies, right? And then looking into the infrastructural capital or organizational capital, and this basically relates to your culture, values, systems, processes, databases, and these kind of things, right? So, you are going to see that what is the ratio of PC to your employees in the company, or what is your corporate culture, whether it enables facilitates better organizational achievement or not. Okay, what kind of databases you are, like you might having good databases, right? But whether you are using data analytics technique to identify patterns, and then whether you are using them for the growth and development of the organization or not. So, simply having databases is not enough, but how these databases are used using certain analytic techniques to identify patterns, trends, and these kind of things, right? And how you are using communication technology, right? So, these are various questions that could be asked, and the idea is that by asking these questions, probably you are trying to find out a measure or create an index for human capital at the next stage. So, these are the different kind of categories in the intellectual capital index. As I told you, it is a relationship, human capital, infrastructure, and innovation capital. Okay. So, if you look at relationship capital, it means how you develop your relationship, trust, retention, okay, what is your distribution channel in terms of productivity and quality, and how productive and quality wise this distribution channel works. Then human capital, basically that deals with competencies of the people. Okay. What are the factors for success, how much value is created by the employees, and that you are going to calculate value creation per employee, okay, and how effective your training and development activities are. In terms of infrastructural capital, you have you are going to measure how efficiently you use, what is the effectiveness rate, okay, what are the key success factors of utilization of various facilities, systems, and structure that you have. And then innovation capital, what is your R&D, okay, what your R&D is doing basically in terms of creating new products, processes, okay, and these kind of things. So, now if you look at this, probably if you are able to measure it, it is going to provide you some kind of index, okay, which is going to be very, very quantitative in its assessment to see that how we are going to develop it. Moving to the next part, the third stage of this technology broker, and at this stage what you do, once you have done the audit for this your intellectual capital, then you are going to assign monetary value to each one of them. For example, at the first stage what you are going to do, you are going to identify what are the indicators that you are going to use. Second stage, how you are going to measure the value, measure these indicators, okay, using questionnaire, survey, these kind of things. And at third stage, once you have identified various measures and you have already measured it, then you are going to provide some kind of value assessment, right. So, it is a part of value assessment, where you are going to quantify the value of various indices of the intellectual capital that you have used, right. So, three kind of approach is used, okay. That is the cost approach, that is if you are going to replace this particular capital, what would be the replacement costs, right. So, replacement cost plus bringing if you are going to have them, what you look at the reference and then you can see it. Then the market approach is that probably you have to say that what is the value of this kind of capital in the market, okay, and accordingly you are going to assign value to this. Third one is income approach. The income approach suggests that how much income can be generated using this capital, right. So, that basically you are going to calculate the NPV, that is net present value of its net cash benefit. It means that you are going to say that what is the value of each capital that you have in monetary terms, right, and how much value it is likely to generate in this value is going to be actually in monetary terms, right. So, these are various measures that could be used to quantify various capital indexes, and then you are going to sum it up and find out what is the value, right. Now, if you look at this, that how this assessment goes on, basically if you look at this kind of assessment for creating intellectual capital index. So, it basically this audit itself become an intellectual capital asset, because this is a process that you have developed to create an intellectual capital for the firm, right, and that would help you to see that and visualize what is your intellectual capital. The only thing is that you make sure that all the capitals which actually are significant and contributing are included in the process. Otherwise, if you are going to leave out certain capital certain indexes, then probably you will not be able to correct its value properly. Right. You can use where it is not possible to go for quantification, you can use for qualitative scales like using a Likert scale, rating scale, and then use some subject matter experts to quantify them in monetary terms. Right. This is a very good approach, and that has been basically marketed by its inventor Brookings, and he says that if you are going to use it, probably you will be able to create intellectual capital index for your organization and see that how it is working and what is the base of your intellectual capital belonging to various components. Now, there are some downsides means that some weaknesses also. One problem that happens that there are certain capitals which can be easily quantified into monetary terms, but there could be some qualitative capitals, right, like how we are going to quantify the relationship capital or the social capital into monetary terms. So, these kind of problems happen, and that is where you are going to use rating scales and then use subject matter experts to quantify it, but this kind of judgment is very subjective in nature, and that is why sometimes it becomes very difficult to measure it, right. So, it is not as rigorous as Scandinavia and Scandia navigator that we have talked about earlier. Now, apart from this approach, there is another major development that has taken place, and this is known as intangible asset monitor, which is developed by Svebe, and he has developed a very good measure actually to see that how we are going to develop and create or monitor intangible assets. Probably he said that if when it comes to measuring tangible assets, it is easy to quantify them, but when it comes to measuring intangible assets, it becomes very difficult to quantify them, because most of them are qualitative in nature, right. So, when we are talking about these kind of things, so he proposed a framework which is known as external structures, three type of internal intangible assets actually, which relates to external structures like brand, customer, supplier relations, then internal structures like management, legal structures, attitudes, okay, R&D softwares and these kind of things. Then third level he have individual competence, that education experience. So, he said that if you are going to use these three into a system, probably would be able to create that the extent to which it is going to help you to relate with growth, development and efficiency, right. So, this is a different kind of measure that is developed by Svebe, which is different from Scandia navigator or what we have just discussed, this technology broker which is developed by Brookings. Now, if you look at this, see what you are going to create basically two things, that is book value and the market value. This helps you to create market value, and then this is the book value, which basically your tangible assets minus the visible debts, okay, I mean the assets and liabilities, right. So, that is how you create your book value, which is a part of what you call a visible equity. Now, if you look at intangible assets, okay, which is related to market value and based on which the prices in the stock market may go up or down. So, that is where you are going to calculate the value of these three type of competencies, that is external structure, internal structures and management individual competence, right. Now, so it has a different perspective, because it is based on knowledge perspective, which says that okay, you must be good enough to understand the value of these factors and quantify them properly, because they are qualitative in nature. Okay. So, you have basically you have both financial as well as non-financial measures to create equity, and then you use it is not that we are going to only use intangible assets, but you are going to also use tangible assets. Okay. So, use both, because if you are going to use both, probably it is going to create a better indicator of your success, and the way it is going to create value for the shareholders, right. So, this is a little different in the sense that you are going to combine both the market value and book value of an organization to see that the extent to which an organization succeeds financially, and also how much value it is going to create for its stakeholders. Now, if you look at this framework, there are three indicators that has been used, that is growth and renewal, efficiency and stability, right. So, these are the various indicators that could be used to measure them, like in under external structures you have how much growth has been happening, okay, in volume, in market share, and what is the customer quality index. Okay. Now, when it comes to efficiency, you are going to see that how much profit you are making per customer, what is sales per employees. So, these indices can be measured quantitatively, and then how percent of large companies that is that has devoted customers. Okay. And then if you look at internal structures that include your investments in IT, R&D, what is the attitude index in terms of culture, customs, and these kind of things. And then what is the proportion of staff in support sales staff, or what is the implied turnover ratios, because that shows stability, right. Simply if you look at the competence, you have to see that share of sales from competence enhancing customers, and it means that when you have learning and development interventions, whether it has been able to bring about a change in the sales performance of the company or not, okay. And whether there has been change in or increased professional experiences for the people, and the extent to which it is going to add value. Okay. It means that employee change in proportion of the employees, right, and then you have professional turnover and relative pay, whether there is a change in the performance, and then what is relating to better pay and these kind of things, because if it is there, probably turnover ratio will be less, right, and you will be able to manage your talent also. So, these three measures have been used by SWABI, that includes growth and renewal by the organization, efficiency and stability. So, these are the three indices which are related to different kind of structures, external, internal, and competence, which is basically related to various type of capital, intangible assets, right. Now, moving further, another approach that is used by the management or organizations is known as economic value added. Economic value added is a very old term which has been in the literature, and the idea is that you are going to use economic value added transformation measures, which was developed by Stewart. Okay. Basically, the idea was to measure the performance of the organization in a holistic perspective, right. So, you use both financial measures as well as non-financial measures like capital budgeting, financial planning, goal setting, how you are going to measure the performance, how you communicate with the shareholders, okay, what kind of incentive compensation you have. Okay. So, everything actually add value to the organization. So, he has said that all activities which are going to add value in economic terms must be included there, whether they are qualitative or quantitative, right. So, he included both. Okay. So, basically it if you look at economic value added, it concentrates on change in the market value added. So, if there is a change in the market value, not in the book value, it means there is a it is a good thing, and it is going to basically for any new project that you take up, for spreading the it has to be spread between market value and the total capital. Okay. The idea here is that you also need to understand what is market value added, because market value added is something that is different from economic value added, right. Economic value added is a performance measure. When it comes to market value, it includes all other kind of things also, right. For example, economic value is going to be added or increased if the cost of capital is less and return on assets and other things are higher, right, investments are higher. Okay. So, next we are going to talk about another important factor, that is actually when we are going to calculate this. So, net sales is minus operating expenses minus taxes minus capital charges, and that this is the formula for calculating economic value added. So, if you have this is a basically a financial measure. So, if you have data on net sales, yearly data on net sales, expenses, taxes and capital, how much you are going to spend on capital, you can calculate the economic value added. So, it means that this is, if it is higher, then probably it shows that yes, the performance of the organization is good. So, that is also would be used as a measure of say intellectual capital, but it is not as comprehensive as other measures that we have discussed like Scandia or technology broker or even CVB also, right. Then moving to another concept that is there in the literature, which is known as market value added. Market value added, the idea is that how much market value is added by the various activities that you are going to do, right. So, you have to say that starting with the inception of the organization, okay, up to the what is the present value of the cash. Okay. So, the only one thing that it takes is that it starts with starting of the company. Okay. So, when the company has started, what was the market value, what was okay, and then what is the current market value. So, the change actually is reflecting that how much value is added. Okay. but it does not account about the variations, the changes that might happen. Okay. Maybe in the beginning the market value was very less, but now it has gone up. So, the one problem with this kind of measure is that it takes history into account, history of the firm into account, right. So, and that is a problem, okay, because maybe certain historical activities may not be good, or there would have been profits or losses on in the past, which is going to be reflected in the market value of the organization, right. So, this is one measure that has been used. In addition to market value, there is another measure that is used by some companies, and one example I am going to give you of Dow Chemicals, which basically use citation weighted patents. Okay. This is related to actually the capital, infrastructural capital, okay, the intellectual capital or intellectual property that is created by the organization. So, he said that all efforts are culminated into creating intellectual property in terms of copyrights, trademarks, patents by an organization. So, if you are going to look into these things, probably you will be in a better position to understand this, right. So, if you look at citation weighted patents that is used by them. So, one example that I have given here is Dow Chemicals, okay, and they use it as a proxy for intellectual capital measurement, and he used 6 processes. First, he is to define the role of the knowledge in the business, then assess the competition strategies, right, and what is their knowledge asset. You see that what is your knowledge assets, okay, into classify them into different categories, then evaluate the value of these assets to keep, develop, sell or abandon, okay, and finally, you are going to see that how much you are going to invest in those areas where there is a gap vis-a-vis others and yours knowledge assets, and then finally, you are going to add all of them together, okay, and see that how it works. Okay. So, whatever knowledge has been created across portfolio, and look into it, and then you go for identifying them and look see that how much weightage you are giving to each of these factors, knowledge assets, and then you go for a weighted average method to calculate the this basically what you call intellectual capital, right. So, these are the different measures that have been used in the literature to identify the intellectual capital index. Thank you very much.